Hello and welcome back to my YouTube channel, Going Places with Abu Micah. If this is your first time watching my videos, welcome to my channel. I talk about moving to Canada and living in Canada as an immigrant. Now, this video is about how to avoid the credit card debt trap in Canada. I will tell you the 3 pitfalls to avoid in order to prevent yourself from getting into credit card debt. I'm going to tell you some stuff that your bank won't tell you or might not tell you, and for obvious reasons. So you want to find out more about that, do stay tuned. Okay, welcome back, guys. So a little bit of a background. I am a licensed financial broker, and I work with banks and financial institutions across Canada, and pretty much help Canadians with different products and services that each of these institutions provide. So pretty much, anything from savings, getting out of debt, protection, buying homes, pensions, retirement savings, and all of that stuff. Now, we help people get out of debt, okay? And one of the most common types of debt in Canada is credit card debt, okay? So I'm gonna lay a bit of a foundation and then go into the traps that you need to avoid, okay? So most of us new immigrants in Canada come from countries where credit cards aren't mainstream. Now, I come from Africa, and I know Africans are going to say, hey, Africa is 52 countries. I understand, I'm from there. So I am from Africa, and generally, like where I come from, credit cards aren't mainstream. But when you come to Canada, we're told, hey, you have to get a credit card to build a credit score so that you can get a mortgage, okay? That's usually the goal of a lot of people. The most common reason why people get credit cards is to build a credit score, right? Not to get air miles, not to get cashback rewards, not to get travel points, not to get free movie tickets. It's to build good credit. And the most common type of debt is credit card debt. So, how do people get there? Right? Now, I can tell you as a financial professional that people don't get into debt because they want to. People get into debt because life happens and they were not prepared. And Canadians will substitute life there with another word. But hey, life happens. And if you're not prepared, that's already a trap. So, 3 most common, pretty much like ways in which people get into debt. Number 1, pitfall to avoid is having a high credit limit. Okay. Now, if your goal is just to build credit, okay, I did a video before, you can watch it over here, about how to start building credit as a newcomer. And I did another video about how to build good credit without a credit card. Okay, so watch those 2 videos, they'll put like this one into perspective. But people don't get into debt because they want to. But now, just because your bank approves you for a $20,000 credit limit doesn't mean you should take it. It doesn't mean you should take a $20,000 limit, right? You just want to build credit. That's what you want, okay? Now, often when I ask people with high limits why they got the high limits, they said in case of emergencies, okay? That's trap number 2, okay? So, but first, let's finish off one. You can build a good credit score with a low limit as long as you stay within that limit, okay? So my own personal rule, this is not like finance 101, 301, 401. This is not something that I like sit down and advise clients. No, this is just my own personal rule. You do what works for you. But what works for me is I don't go for a credit limit that's more than a month's worth of expenses. So if, let's say, my monthly expenses are, for argument's sake, $5,000, I'm not going to take a card with a credit limit of $10,000. I don't need that much credit. Okay. So, second thing, that second like pitfall to avoid is not having an emergency fund. Now, this comes back to a fundamental, what I would say, a fundamental mentality that is wrong. Okay, of I want to use my credit card for emergencies. Okay, that for me is wrong thinking. Okay, That's how people get into debt. Because I will tell you from research, half of Canadians are living paycheck to paycheck, sometimes even more than that. So paycheck to paycheck means that you're maxing out your income. 100% of your income is being spent. And sometimes because it's Canada, some people are even spending more money than what they're earning, thanks to credit cards, thanks to car loans, thanks to student loans and things like that, right? So if you are maxing out your income and you've got a credit card in case of emergencies, where are you going to get the money to pay back the credit card? Because life happens, you lose a job, you don't have a job for like 3 months or 4 months or whatever, you still need to take care of bills. Yes, Canada's got employment insurance, but that can sometimes take 2 months to pay. During those 2 months, you have to take care of expenses. And what a lot of people do is they use the credit card to cover the gap and then say, I'm going to pay it back when I start working again. But when you start working again, you're maxing out your income. You don't have the money to pay back the credit card. What happens? You end up having an unpaid balance, and you start paying interest on that unpaid balance. Okay? So that's number three. I'll get to number three, which talks about interest rates. Now, instead of relying on your credit card for emergencies, have an emergency fund instead. Okay, that's what I advise clients. Have an emergency fund. Use that instead of your credit card for emergencies. Your car breaks down, use cash. Funeral back home, you need flights and whatever, use cash. And a lot of people are not able to save money because they're maxing out their income. Now, quick math, and this works regardless of what your income is. If you live on 80% of your income, okay, 80% of your take home pay, that's what you live on, you're able to save 20% every month. Now, if you save 20% of your income every month, it will take you 12 months to build a 3-month buffer. Do the math, it works regardless of what your income is. Okay? So, if it's going to take you a year saving 20% of your income to build a 3-month buffer, how long is it going to take to build your 6-month buffer? It will take you 2 years. So what I always say, I talk to newcomers a lot. What I always say to newcomers is, hey, take half of your proof of funds money and put it in an emergency fund. The other half, use it to settle. Okay? And then look for any job that you can find so that the job takes care of your living expenses and you've got money saved. That way, if anything happens, 3 months, you've got a buffer to take you to the next job or to the next whatever. Your car breaks down, you're taking cash, you're fixing it. That's better than relying on a credit card for emergencies. Third pitfall to avoid is getting a high interest credit card. Okay? I bet you 9 out of 10 Canadians have got a credit card with an interest rate of 20%. Okay, 19.9, 19.89, 20.99. That's a lot. Imagine owing 20% on $10,000. That's $2,000 every year. And you're maxing out your income. You don't have the money to pay back the $2,000. It continues to grow. So every bank has got what I call low interest credit cards. We tend to shy away from low interest credit cards because they come with an annual fee. Now, what's better for you? Owing $2,000 on a debt of $10,000 with no annual fee, or owing $1,000 on a debt of $10,000 with a $30 annual fee. What's better? So every bank has low interest credit cards. If you want a low interest credit card without an annual fee, I recommend the RBC Rate Advantage Visa. No annual fee, very low purchase and cash advance rates. So if you ever, in the unlikely event that you have to carry a balance, you're carrying a balance on interest rates of like between maybe like 7 and 11%, rather than on 20 to 23%. Okay, so those are my tips, guys. I like keeping my videos under 10 minutes. I've already gone above that. So hope you found this information useful. If you did, I'd love to hear your comments. I'd love to read your comments. Like the video if you liked it. Share it with somebody you think would find it useful. Subscribe and turn on notifications so that you don't miss out I'm going to be doing a series of these financial videos and sharing like financial tips, how finances work in Canada and how you can get ahead. Until next time, guys, peace out, and I'll see you in the next video.